India's external economic accounts are feeling the consequences of the monetary tightening that has occurred in the Western economies. The ebbing of funds has put stress on the currency, while the declining global crude prices and the rising services exports are providing some relief and may result in a current account surplus in the fourth quarter. Foreign direct investment inflows, a reflection of the less than positive global economic climate, have dipped by nearly 13% this fiscal. Inflow of foreign institutional investors has also seen a decrease, with the investors collectively having sold equities worth $6.1 billion on a net basis. This decrease in FDI and FI is expected as the easy liquidity has been reduced as part of the tightening in the West. Additionally, investments in foreign markets have been lowered due to shifts to gold investments. From April 2022 to January 2023, India saw a gross inflow of overseas investments totaling $84.4 billion. Of this number, $41.9 billion was fresh overseas investment in equity, $15.9 billion was reinvested earnings, and the remaining $3.7 billion was attributed to other sources. On a whole, the net inflow of foreign investments to India during the 10-month period was $20.2 billion. This figure is lower than the $24.5 billion seen during the same period the previous year. The reduced energy prices and considerable services trade surplus are likely to ensure a current account surplus in the fourth quarter. This will in turn reduce the reliance on capital flows to finance the current account deficit, which has been the trend in previous years. Services exports to other countries have seen a massive increase of 30.5% in the 11-month period, which is the biggest increase in over a decade. Since India is an attractive investment opportunity for overseas investors, the services and electronic industries are likely to draw these kinds of investments into the country. As we can see, India's external economic accounts are switching from a deficit to a surplus in the fourth quarter in part due to the falling international crude prices, the surge in services exports, and the increased interest from foreign investors.